Hey, my name's James Nicholson. I hope you're well. In this video, we're going to talk about how you can survive a property crash. What could you be doing to make life that little bit easier for yourself and making sure that you save a ton of interest payments and maybe even finish that mortgage that little bit early. So while you're here, make sure you smash that subscribe button and hit the bell notification. Also, smash that like button as well, guys. That really helps us with the YouTube algorithm. So, look, this is an uncertain time, isn't it? And so we've had videos about prices going up, we've had house prices going down, and it's been pretty flat, the market. But we all kind of sense that there is that looming property price drop on the horizon. It's written in the tea leaves, as they might say. One of the key reasons for that is inflation. And so inflation has been sticking around now for a while. It's in the news every single day. You feel it in your pocket. You feel it when you go and buy food. You feel it when you go and buy fuel. Everyone is seeing that inflation is really here and it's sticky and it's really difficult for the government to deal with. Now, normally what they would do to deal with inflation is raise the interest rates higher than the inflation amount in order to push that down. Now, analysts have been arguing whether that would work in this type of inflation because it's not us that's out of control. It's kind of something that we can't control, which is the energy costs has been one of the biggest problems round about this sort of time. So interest rates have been rising. We've had 12 consecutive Bank of England rises in the interest rates. And so what that means is that people are feeling the pain. Now, inflation is being promised by the UK government that it would halve this year to 5%. We're down to 8% from 10, but it's not coming down fast enough. And so they're considering putting the interest rates up again. You see, a lot of countries have already got that inflation sorted. America, for example, is down to just 4% inflation now. And that really is where we need to get to pretty quickly. So it's looking like interest rates are going to rise. That means payments are going to rise. And 1.5 million people on a mortgage have a deal that ends in the next 12 months. Now, a lot of those people had rates at 2%. They're going to be likely looking at rates at between 5 and 6% if they come off in the short term, and potentially 6 and 7% if they come off in a year or so from now. Now, that's going to mean payments are going to be a lot higher for a lot of people, and so they need to make sure that they get themselves sorted quickly. So here's some things that you can do to help yourself if that's you and you're in that scenario. First place I would go is actually to your existing lender. And so I would negotiate with your lender. Now, why would you do that? Because they may be able to give you a good rate that maybe isn't on a comparison site, because every lender has lots of different rates and they don't just have one. So for example, HSBC don't just say, yeah, our rate's 5.5. They will have lots of different products for different lengths of time, depending on how much money you owe, depending on your credit risk to them. So they kind of know your scenario better than anybody else. Now, what you can do is when you go direct to the lender you're already with, is save on fees. That is an option to have, because a lot of the fees at the moment are around £2,000 per mortgage. And so that's quite a lot of money. But if you can save that, that's going to help, because those fees often, you don't pay them out your pocket, they just get added to your loan. So first and foremost, go and negotiate with your existing lender and see what they can offer you before you start spending on brokers and stuff like that. This is important. Get off the standard variable rate. Get off the standard variable rate. When your deal ends, you're going to go on the standard variable rate. And with a lot of banks at the moment, that is 7%. Some places it is 8%. So that is a worse rate than you can get on a fixed product. Now, we were looking at this, it was only 4 or 5 months ago, where for some people, it was better to stick on the standard variable rate because that was lower. But we've had all these interest rate rises since that it's not smart to sit on that standard variable rate. Get off of that, get onto a fixed deal. First option, go and negotiate. Second option, Go and get a broker that's got the whole of the market that can look at the scenario for you and get that sorted. That's an important one. Next, this isn't what I do as an investor, but this is the right option for a lot of people, and that is to overpay. So if you want a bit more certainty on your price and get that mortgage cleared while the interest rates are high, while the house prices are a little bit more uncertain, overpay, if you can do it, is a smart way to do this. Now, what you can do is you could use a big chunk of money. If you've got a big chunk of money, you could overpay just to bring your monthly payments back down, giving you a bit more certainty. Or I've worked out some numbers here, and so you can do this, which is something that I think most people could afford. So let's just say you had a £200,000 mortgage. That's not an uncommon size mortgage. I'd say a lot of new mortgages are around that if you bought in the last few years. Then let's just say you just overpaid on that mortgage by £100 per month. What impact would that have on your mortgage? Well, you would actually complete that mortgage 4.8 years early, which is good. And you would save in interest payments, just in interest payments, £32,000 and £21. £32,021 you would save just by paying an extra £100. Now, you're not committed to do that forever. If you did that for 6 months and then you needed to stop, you can just pay your normal amount. You're not committed to overpay, but you are eligible to do that. So doing that is going to save you 5 years of mortgage payments and 32 grand. Pretty good. Next, let's have a look if you overpaid by £200. Obviously, that's going to make a bigger impact. You would clear your mortgage 6.4 years early, which is a big, really big period there. And in interest, you would save £54,000, £54,079. Crazy. £54,079 you would save if you paid off just £200. Now, a lot of people could do that. And what you can consider is energy prices are coming down. So if you've been affording the interest rates that you're at and you've been paying that energy, you're going to have a lower energy bill for the next part of the year. Fingers crossed. That's what it's looking like. So use that money and overpay your mortgage. That's one way to get your affordability better, to build some equity. So when the times are a bit more certain, if you want to invest, you can pull out that equity and use it to buy some investment properties or something like that. Now, another thing that a lot of people don't know, but it is common knowledge, but not something that lots of people do. You can actually overpay with a lump sum by 10% a year. 10% a year you can pay as a lump sum. I actually had a good friend of mine who was in a very fortunate position, very wealthy family. His birthday present was 10% of his mortgage paid down every single year. What a great position to be in, right? And so that's something that you could do as well if you come into some money. Maybe you come into some inheritance, maybe you get a big bonus at work. Something to consider to make this property volatility a little bit more certain. And so some people like me, we see the property crisis, I'd say it's called now at the moment, as an opportunity, but that isn't for everyone, right? I see that there's good deals coming on the market and that's what I'm looking for, but not everyone's that way inclined. So if you're not, that's fine. You don't need to be. This is how you can protect yourself. And even if you're an existing landlord, maybe you look at this as well and you look to overpay, you look to negotiate new rates. This is really important. Don't stick on the standard variable rate. Get yourself overpaying. If you really value certainty, then this is the video for you. Let me know your thoughts in the comments. Do like the video. And if you haven't joined the Property Accelerator yet, that gives you access to all the strategies that work in today's market, like serviced accommodation, like HMOs, like flipping properties. All of the training programs you get access to for 7 days for just £1. It's an absolute no-brainer deal. I'm going to link that as a pinned comment. So go and check that out. Check out all the other content on my channel, including this video right here.